Hello and welcome to Forex.Academy, and to this short webinar we will be discussing effective trading strategies with a particular focus on part-time technical trading. Before we do so, please consult the following disclaimer. There is risk involved trading the financial markets, and always take account for your risk. Now let's focus on the strategy objectives of this part-time trading strategy. It focuses really on acutely using technical analysis to identify high probability technical setups. Okay, so you are going to have a focus on your technical analysis, given it's a part-time strategy. Now, why is that the case? Well, of course, if you're looking to use a part-time strategy, you're not at the trade screens 24 hours a day looking at the price action as new information becomes available. You're simply basing your technical analysis off the closes of the daily price action setups. To focus on trading the markets part-time, perhaps trading 1 hour per day. So that's a real focus, a real advantage point for those in full-time employment, perhaps, who do want to trade the financial markets and look for medium to long-term views, perhaps over the course of 2 or 3 days or a week. If you look at the oil market and see that it's appreciating in value, you may look to trade that for a period of 4 or 5 days to capture perhaps a $2 move as opposed to 20 or 30 pips in terms of scalping the markets more short time. You want to avoid short-term volatility. So that's one of the main focuses of a daily trading strategy, and as well a part-time daily trading strategy. You may go to your trading platform perhaps 1 hour before the close of the markets, look and assess the close of those daily candlesticks, and base your decisions off the total structure of the daily price action. You don't really want to get caught up in the intraday volatility that the markets do have. And you want to profit from a qualitative risk-averse trading approach. Okay, so because you're trading part-time, you don't want to feel the pressure or risks involved too much in financial trading. You simply have a few trades. Perhaps you might have 1 or 2 trades over a week, simply looking for an appreciation in a forex pair, or perhaps in a bullish move in terms of an equity index over the course of the week to look to profit. So it is going to be focused more on that qualitative technical approach to your analysis, as opposed to looking at a recent price action and getting involved more in the short time. Let's look at this strategy in practice and ask yourself the question: what constitutes a part-time trading strategy? Okay, so what do we have on screen here? We have the dollar index, and we are observing daily price action setups. So this is something more observable in terms of viewing and assessing the daily price action structure, looking for perhaps good trades over the course of 6-7 days, and perhaps you're looking for 200-300 pips per trade. So effectively what we have here is a short entry just at this price right here, and we have a couple of pieces of analysis to tell us that we have a potential trade opportunity. We have technical resistance here at our level. We have support levels in around the highs and the lows of this market, and as you can see, the most recent or relative price action, the market actually trades up and just touches the high and reverses from such a level, trading to the downside. So what we look to do is change our time horizon from short or medium term to an overall view where this market is going in perhaps 3 days or 1 week or 10 days, something like that. So we have to have a time horizon of the trade suitable to long-term price objectives. There'll be no point to really take a trade one evening and then to check it the next evening the market has moved with you, but it's only moved 20 pips and you're looking to just take profit. That is not the reason why you'll look to actually get involved with this trading strategy. And again, we have some technical analysis here to constitute a possible sell opportunity. We have the relative strength index, one formidable indicator that can give you a signal. In this instance, it's an overbought signal. We sell the market when the market tells us that we have overbought signals here. Now we have a few false signals as well, but as we use this technical confluence with the technical levels of support and resistance there, we get another overbought signal there. We may look to sell this candle right here for a sell opportunity, and effectively the market looks to trade to the downside. Again, the market starts to move in terms of the indicator, starts to coincide with that, and we see momentum start to relax. So we have an assessment of the fundamental conditions. We have the daily price action. We have some technical confluence that could suggest we could trade this off the daily price action, not check the market every 5 minutes to check where the prices are and where we have moved to and how much profit or loss we have in the trade. We'll simply come to our trading platform with our stop loss in place, knowing that we're safe, of course, upon entry. Look to trade the markets as such part-time. Let's move on to another trading opportunity that we can assess. Here we have the Australian dollar against the US dollar. Now, what do we have on screen? What constitutes a part-time trading strategy here? So let's walk through this trade. First and foremost, we have a short entry at this price. Okay, so what we have on screen again is quite a bit of technical confidence that we can view. We can wait, we can be patient for the best technical setups to arrive. When they do, we can look to trade this over a 5-day period or a 10-day period or whatever time horizon is more suitable to your profit objective. So right here we have a series of lower highs right at this level here. You can see the market's moving down quite consistently. Again, we have a moving average 100-day SMA, simple moving average with a bearish trend outlook, and you can see it's just moving down towards to reflect most relative price action here. And again, we have this zigzag motion where it's very clearly observable in this market that we're looking for a technical bounce. You can see it bounces off the low right up. We have a Fibonacci retracement as well. It breaks through the 23.6 right up to this level as well. 38.2 is our next Fibonacci retracement level, and it actually retraces off such a level, so that looks like it's giving us some technical indication as well. Now the last thing, if I just remove some analysis on screen, we can see we have a very well formidable formed price channel just as this market moves down in this linear fashion here. We can see there's a lot of volatility in that medium term, but you're looking to effectively trade this in that medium term, and you're looking for a profit perhaps to the next price channel or in between. Again, it's simple good risk reward on the trade. You're changing your expectations, your profit expectations, to be realistic on the time horizon of the trade, using your technical analysis to get involved. And again, it's a part-time strategy because you're looking and observing and trading only off the structure of the daily candlesticks as they move and close each particular trading day. So in this one example, you could sell this market perhaps off this second candle, say here, we get our short entry, and then we'd be holding it for 1, 2, 3, 4, 5 days for that level of profit. We could continue to hold it to the downside. So you can see how we enter over the short term to medium term basis, always looking at the technical analysis with the fundamental backdrop. And again, the benefit of this is that you don't have to be at your trading screen 2 or 3 hours a day or even more. You can objectively give yourself some time during the evening to come to your trade screen, perhaps before the cash close at 9 p.m. of course in the US, and relative here for the futures market at 9 p.m. UK time, 10 p.m. European Standard Time. You might look to just position yourself based off the close of the Japanese candlestick. So it does add that level of comfort that you can actually trade the markets part-time and profit as a financial trader. In practice then, your ability to read the signals of the daily Japanese candlesticks is the key factor to success. So again, simply judging the daily candlestick structure, that's all the information you need with your technical analysis. You don't have to zoom in and look at the candlestick structure of perhaps 30-minute price action, 1 hour or 4-hour price action. You're looking at the daily candlesticks. Now let's cast an eye on the strategy's implementation itself. Okay, it is a qualitative approach, prioritizing quality over quantity. Traders can select only several of their preferred technical setups on a weekly basis, perhaps only placing 4 or 5 trades a week. Profit will then be dispersed over fewer trade positions. So as a contrast, let's look at a more short-term trader and to the part-time trader here as well. Okay, the short-term trader, how does he make his money? He gets involved actively in the markets here. We have 15 trades over many different asset classes, effectively winners and losers, and that's how we profit, perhaps on a daily basis, 71 euros. Okay, so we've kept discipline. We've traded the markets effectively over the trading day, and we've profited. Now, the part-time trader might look to just use his own technical strategy. These trades might be open for 4 days or 10 days. The time horizon is the personal choice of the part-time trader. And effectively, because you're trading part-time, because you're trading off the daily candlestick structure, you're looking for larger price swings as opposed to intraday price swings. So let's look at this portfolio of trades here. We have 4 trades. We have effectively 100 euros monetary exposure on each individual trade. Okay, and that means we need to outperform such a rate. So we have a 96 euro winner. Okay, then a 140 euro winner, which is a great winner indeed from a risk reward perspective. The US 10-year Treasury bond then is a smaller loser. You can see he's used his discipline to actually cut that loser short. So perhaps all these positions are actually open at this particular time, and this is the reflective P&L from this part-time day trader as the markets move intraday. So again, if this trader comes to his trading platform at the end of today, he might look to close out his positions for the week and profit over the course of the week for a profit of €188.19. So it is a different trading strategy to, of course, your interactive, perhaps an interactive scalper here to the short-term trader. What are the key principles to this trading strategy? Of course, well, it's perfect for those in full-time employment who may only be able to dedicate a little personal time to trading the financial markets. And there are plenty of traders that I've spoken to over my years trading that actually trade on this basis. Perhaps they work in the financial sector, perhaps they're teachers, or they work in a completely different sector, and they dedicate perhaps 30 minutes or 1 hour trading a day in the evening, 3 or 4 times a week to look for profit in the long run. In accepting to trade only the daily candlesticks and their structure, the trader does not take short-term intraday volatility into account. So you're effectively looking to avoid all that chop, all that volatility of intraday market noise. And focusing on a purely qualitative technical approach will allow the trader to trade any liquid asset class with the same strategy should an opportunity arise. Okay, because you're focused on technical analysis, you can actually trade any highly liquid asset class with the same effective strategy. So that brings us to the end of this short webinar discussing an effective trading strategy more focused on a part-time daily candlestick approach. Thank you very much for joining us here at Forex.Academy. We'll see you next time. Bye for now.